The Women's Guide to Successful Investing by Nancy Tengler. Summary. Nancy Tengler, Chief Investment Officer and Financial Advisor, outlines how to choose, investigate, and develop a successful investing strategy to achieve your objectives. Nancy advises focusing on price and yield when buying equities. Just like when we buy toilet paper. Numerous individuals screaming on the stock market trading floor come to mind for many of us when we think about investing. Although many of the world's top investors are women, the entire industry seems to be driven by testosterone. The thought of selecting and purchasing their own stocks and investment funds, especially those without a background in finance, still intimidates many women. Nancy Tengler, an investment manager, can assist with that. In The Women's Guide to Successful Investing, Tengler distills her years of investment expertise to help you reach financial security and your goals. She explains terms like price-to-earnings ratio simply and starts you on the path to confident investing and future control. Before you begin to work toward your goals, you must first define them. Instead of investing solely to outperform some random index, goals-based investing is nothing more than setting distinct objectives for distinct life events. Despite the prevalence of male financial managers, counselors, and investment professionals in popular culture, studies demonstrate that women typically outperform men as investors. According to research, women tend to possess specific characteristics that make them better money managers. Whether they are handling the household budget or an investing account. Women typically lack the overconfidence that frequently gets males into trouble when making investments, and they also tend to be more risk-averse when it comes to handling money. If you don't know what you're investing for, it can be difficult to determine what to invest in. Set clear objectives before you start any financial strategy. No matter what your investment goals area, college costs, a wedding, a trip, or retirement, you must first establish them. The sooner you start investing your hard-earned money, the better. However, there is still time. Every little bit helps. You don't have to be rich to start buying stocks or mutual funds. Even if it only amounts to a few dollars each week or month, saving is just as vital as investing. All of it adds up. Establishing discipline is essential for both investing and saving. Contrary to common get-rich-quick theories about the newest hot stock, investing is a long-term discipline. Early in life, decide what you want out of it, then follow through. If you feel that there is no hope left because you have waited too long, keep in mind that there is always time to save. Consider what you truly desire. Establish distinct bank accounts for your short, medium, and long-term goals. Your money and investments will be divided amongst them. Additionally, you want to practice researching businesses. Make your portfolio out of holdings that will behave well if things get out of hand, just like an invitation list for a dinner party. Once your objectives are clear, do your research and hunt for businesses that share your goals and values. A responsible investor will never make a purchase in a business they are unfamiliar with. Growth investing and value investing are the two main types of investments that investors make. Growth investors favor a company's potential for increasing sales and earnings over its stock price. Stock prices are often a factor for value investors. Online news sources and free investment research tools will provide you with all the data you need to compare growth and value. A stock doesn't inevitably expand and become more profitable merely because it is inexpensive or a good value. The sweet spot is, ideally, purchasing stock in a company with strong growth potential at a fair price. Keep in mind that investing is a talent that develops over time. Ignore opinions and pundits and read and listen to real information about a firm and the markets. Only you know what will work best for your objectives and plan. Always diversify your investments across industries, companies, and regions of the world. Whether you're purchasing individual stocks or shares of a mutual or exchange-traded fund. Don't put all your financial eggs in one basket just because you adore tech stocks. Learn the terms used in the investment industry. Starting with ticker symbols and moving on to price-to-earnings ratios will help you understand investing terminology that doesn't have to be difficult. Never try to maximize overall return, and never, Never purchase stock in a business you are unfamiliar with or that does not align with your risk tolerance or investment goals. Although you don't need one, it helps to know what to expect before hiring one. There is nothing wrong with purchasing shares in a fund if you lack the time to thoroughly research and select a basket of individual company equities. Exchange-traded funds, or ETFs, are preferable investments to mutual funds. An ETF is not a collection of individual company stocks, but rather a mirror of a stock index, such as the Nasdaq or the S&P 500. A traditional fund that mimics the SP index is the Vanguard SP 500 ETF, ticker VOO. You probably won't need a financial advisor if you've been dedicated to studying investing, even in your free time. If working with a professional financial advisor makes you feel more at ease, be aware that women are not particularly well served by the sector. Financial services are one of the worst industries for women to deal with, according to studies. Finding a female money manager is certainly a smart move because women frequently complain about being treated with contempt or ignored by male advisors. Find a licensed financial advisor since stockbrokers make money by buying and selling shares and charge you for the privilege. They don't move about, they just charge set fees for guidance. Find a financial advisor who can properly articulate both her personal investing philosophy and complicated concepts. First, be sure the advisor values transparency and discloses all fees. You might request to look through a sample stock portfolio held for clients who are comparable to you. As this interaction progresses, you'll pick up new information, and you make adjustments as your own skill improves. Choose businesses that share your principles. Make sure the firm is one you wish to support if you plan to own stocks for a while. It's simpler than ever to become your own financial counsel because of the abundance of free research available. While learning the fundamentals of stock analysis may take some time, once you do, you'll be well on your way to long-term stability.